Howdy, this is David Groce, your Texas tax and lawman. Last time we talked about the PPP loan and the second step in the process, loan certification, and how to get your loan forgiven. Today, let's continue our corona relief discussion using the Jumanji movie as a metaphor. In Jumanji, each character had special abilities that helped you play the game, and you had to know how to use each of these special abilities to survive to the end.
What does that mean?
Well, I think it means you carry my weapons in your backpack and you give them to me when and if I need them.
Okay, there's the door. We just need something to cut through the fence.
Okay, Fridge, you got anything like that in the backpack?
Yeah, sure. What? Here you go. I got some bolt cutters. Does that seem like a good tool for the situation?
Perfect, actually.
It's called backpack power, baby.
Today, let's look at the CARES Act backpack, and let's look at the top 10 list of other tools to survive this coronavirus challenge. 1. Economic income payment. The first relief most taxpayers should have received is the $1,200 per person and $500 per child economic stimulus check for individuals earning less than $95,000 and married couples earning less than $185,000. This was the first provision to roll out, and many people have received these EIP payments. Still, many others have not. If you have not received your check, go to irs.gov/coronavirus/economic-impact-payments to check on yours. Second, waiver of the 10% early withdrawal penalty. For clients under age 59 and a half who have money in an IRA, there exists a 10% early withdrawal penalty for taking money from your IRA. In 2020, this penalty is waived. If you lost your job or need those monies, you can now make an IRA withdrawal and not pay the 10% early withdrawal penalty. Third, borrow up to $100,000 from your IRA or retirement plan. Under this rule, you can borrow up to $100,000 from your IRA and not pay tax. This may sound great, but understand that you still have to report the withdrawal, pay the tax, and then claim the tax refund over the next 3 years. Those are a lot of complexities. I would only recommend this to clients who are truly hurting and need the money to survive. 4, skip your RMD. For clients over 70 and a half, the Secure Act at Christmas increased the age to 72 before you had to start taking required minimum distributions from your IRA. But even better, the CARES Act waives the RMD withdrawal requirement for 2020. If you're a senior and you don't need the money from your IRA this year, you do not have to take your RMD. 5, claim the payroll tax credits. For employers, the CARES Act allows you to take a credit for the 6.2% payroll tax you pay on your employees. In our first video, we advised that you cannot take the payroll tax credit while receiving the PPP. But after the PPP, if your business is still struggling, the tax credit is a great tool to manage your cash flow and keep paying your employees. These are technically 3 different payroll tax credits, 2 for paid leave and 1 is for retaining employees. These credits cap at $10,000 per employee. 6, enhanced charitable giving deductions. The CARES Act allows all Americans to take an above-the-line charitable contribution deduction up to $300. Even if you claim the standard deduction, you can still deduct $300 of charitable giving on your 2020 tax return. 7, charitable giving limits increased to 100% of AGI. I serve lots of generous clients who regularly support churches, ministries, and charitable organizations. The IRS rules limit the amount that you can give and take a deduction. The Trump tax cuts increased the limitation from 40% to 60% of your adjusted gross income. For 2020, the CARES Act increases the amount to 100% of your adjusted gross income. If you have money and feel led to give, this is the year to do it. Now is a great time to show your generosity and help those in need. 8, loss carryback is revived. For my whole career, a business was able to carry back losses from 1 year to the 2 prior years and file an amended return. The Tax Cuts and Jobs Act changed that and allowed only a loss carry forward. However, the CARES Act revived this 2-year loss carryback. For clients who had a great 2018 and 2019 and then a big loss in 2020, this will allow you to get back some of the taxes you paid in prior years. For your 2019 return, you could carry this loss back to 2017 and 2018 returns. 9. Extended tax filings. Most tax filings have been extended to July 15th. From there, we can file our normal extensions to September 15th for businesses and October 15th for individuals. The July 15th extension was for everyone. 10. Defer payroll tax payments in 2 payments to 2021 and 2022. The final provisions for employers with less than 100 employees allows you to extend payment of the payroll taxes into 2 payments, one on December 31st, 2021, and the other on December 31st, 2022. Now, I don't recommend this for everyone, but if you have a long-term plan for success but just need some temporary cash flow help, this may be a good thing. Just keep in mind that you must pay these payroll taxes. They do not go away. They cannot even be forgiven in bankruptcy. The IRS views these payments as a trust and holds you personally liable if you do not pay them. My advice is to stay current and pay the payroll taxes if at all possible. Take this payroll tax deferral only if you have a sure way to pay them in the future. Looking at all these provisions, you may want to pull out 1 or 2 and use your special move, like dance fighting, when you need it.
Hey, do you guys like to dance?
Until next time, adios. Texas Tax and Lawman Legal Disclaimer. Hey, I'm a lawyer. You know I have to have some lawyer mumbo jumbo. This is a general information video, not client attorney privilege information. The content is information only and is not directed to any specific facts or circumstances and cannot be relied upon as a legal opinion, even though that would be nice and save you a trip to the lawyer. If you have a specific legal question, feel free to contact David Groce directly or seek qualified legal or tax counsel in your state of residence, state of mind, or whatever place you call home.